If you've been following all the news in the housing market, it has been crazy. With nearly 24 years in mortgage business, this has been one of the craziest couple years. Rates way up, rates come down a little bit, rates bounce back up. Not enough homes for sale, a little more homes for sale, not so many homes for sale again. If you're wondering what's happening in the housing market right now, and you're wondering if you can buy a home, watching this video, you're gonna be able to navigate the current real estate market, and you're also gonna see my predictions for next year and beyond. I think where we start is understanding the current market as it stands right now. I believe that most politics are local, national, whatever, but a lot of it's local. What happens and what's really affecting your life. Real estate is very much like that. It's what's happening in a local market. So it's going to change market by market, but there's a couple big things that had driven it regardless of the market you're in. And what that is what happened in 2020, 21, and 22. Ridiculously low interest rates that fed a feeding frenzy of people getting into the market, buying homes, also refinancing their current debt to ultra low, never before seen interest rates, locking into those interest rates. We had the big Airbnb. Let's do short-term rentals, mid-term rentals, whatever kind of rentals. Got investors that moved in that wanted to own a hard asset at an ultra low interest rate. So all these things happen in 2020, 2001, 2022. What's happened in the last couple of years? Rates have shot up. What has that done? Number one, this has made housing a lot more expensive. You have a 3% interest rate compared to a 7% interest rate. You're paying more than 2 times as much, 2.5 times as much just for the debt service of that loan. All the buyers that locked into those super low interest rates, let's say they want a house just a little bit bigger, and you're going to spend maybe $100,000 more for another bedroom or just a couple blocks over or something else, you're going to have to pay twice as much plus the $100,000 to go buy another house that's just a little bit different, a little bit bigger, a little bit this, a little bit that, and you're stuck on that, and they don't want to do that. So there's been a pent-up demand that people haven't moved because they love that low interest rate. So that's a piece there. The second piece is that we as a country have underbuilt. I've read some different numbers, 10 million, 15 million fewer homes going back from the Great Recession until right now. So when we look at this period of time from 2009, 10, and 11, when a lot of these builders went out of business, and we as a country did not build the same number of homes we have for a very long period of time. So we have a decade of underbuilding homes. So we don't have new supply coming online. Basic economics, it's supply and demand. If there's not enough supply out there, it's going to drive up demand and ultimately drive up prices. So talking about this at a high level, it's going to give us kind of a context of how sellers are behaving, how buyers are behaving, how the market in general is behaving. So let's dive in a little more to each one of those. The big impact right now is the sellers and the seller's behavior. If the seller of a current existing home chooses not to move, there's less inventory out there. Some of these sellers have been waiting 3, 4, 5 years. Heard someone recently, a friend of mine who's a great public speaker who talks a lot on real estate trends across the country and what's happening. He equates it to a bow, and a bow and arrow when you pull that bow back. And he feels like the real estate market, specifically with the seller side of it, is like a bow. And all this energy is built up and it's just waiting to explode when sellers will finally sell. You can only live in that house that's too small for so long. Young families with kids, they want to get into a school district, can only put that off for so long. I think the big driver that will drive that is interest rates coming down a little bit. And the expectation in the coming years, we're going to have higher interest rates for longer, but they're likely going to come down slow and steady. If rates do come down slow and steady, we should see a steady amount of sellers entering the market, creating more opportunities for buyers and opening that market up a little bit. So The opposite of the seller, the other side of the transaction is the buyers. And here's what's happening in a lot of the country right now. Buyers are feeling fatigue. They're fatigued in looking at what the payment's going to be compared to what it was a couple years ago. Buyers are fatigued that not only the interest rates are higher, but the house prices are higher. So if you're a buyer, what do? Suggestion I make with buyers is be ready to pounce and be ready when that opportunity comes up. So if you're a buyer and a prospective buyer, you need to put yourself in the best position to be successful. Piece of that is being fully pre-approved, knowing what you can buy, knowing how much the payments are going to be, knowing how much the cost related to that, know how much the down payment's going to be. Another big thing with buyers I suggest is plug your nose when you're signing the mortgage paperwork and the interest rate's a little bit higher. It might stink a little bit right now, but if we look at the history of mortgage rates, a 6% mortgage rate compared to 40 and 50 years of interest rates isn't that high. It isn't what it was a couple years ago, but a couple years ago was an anomaly. The 6% number isn't that bad in the big picture. In addition, when you lock into an interest rate, that means that rate will never go up and never get higher, but it can come down and it may come down. My opinion, I think we're going to see rates at some point down the road, something that starts with a 5. Rates come up, rates come down. Will they ever get to where they were? Probably not. But the time to look at buying is as rates come down. Waiting until they bottom is a fool's errand. It's kind of like trying to buy a stock at the low point or trying to sell it at the high point. You can't ever time it. It's the same thing with real estate. Get in and buy when you find your right house. You have an opportunity when rates come down to refinance. If it takes another year for things to drop and you own that home, you could see appreciation of a home of 5%, 7%, 10%, depending on the market you're in. So be prepared, get ready to jump. So when the inventory comes up, you're ready and you're ready to go. So talking a little bit about the seller's mindset, the buyer's mindset, where the market's going, let's talk a little about negotiation. A buyer is going to be at a disadvantage for the near future, in my professional opinion. And the reason why, there is still going to be a shortage of housing. The seller has an advantage. There's not as many houses on the market, and that's going to continue. So you as a buyer are going to be a little bit of a disadvantage. Maybe you can't beat that price down. Maybe you can't negotiate a 60-day close. They want to close in a shorter period of time. It's a good thing to go in and know that you're probably not going to be able to make an offer 10, 15, 20% lower on a house that just hit the market yesterday. It just isn't going to happen. So I think having realistic expectations is the case. If you're looking at getting a discount, I think those opportunities are out there. And they're out there on homes that have sat on the market for a little while. A listing potentially gets stale. What I mean by stale, it went up, that seller and that seller's agent listed that property too high because they thought they were in a really big advantage and maybe they're only in a slight advantage, and it sat out there in the market for a period of time. Those are the houses that have been out there 60, 90, 120 days where a good offer at a lower price is possible. A good offer with the seller paying some of your cost is possible. A good offer with the seller contributing to you getting a lower interest rate on that is possible. A simple example on a house that maybe has been on the market for a little bit. Let's take a median house price in the United States of $400,000. If you could negotiate a $10,000 discount on that price, that might make a $70, $80 difference in your monthly payment. Another strategy might be, instead of negotiating a $10,000 lower price, maybe you get the seller to pay $10,000 towards your cost. So if you're putting 5% down on a $400,000 house, you're going to have an additional $10,000 in traditional cost associated with buying a house. You can negotiate that seller to pay your cost, so you bring in just your 5% down. With most first-time home buyers, it's more important to have some cash in the bank when you buy that house, not saving $70 or $80 a month. 2025 prediction, even going into 2026. What's great with video, look at the tape. Go back and look at this and see if I was right. I will tell you my prediction, slow and steady interest rates over an extended period of time. Rates will come down a little bit. It'll be over a longer period of time. More houses will enter the market. Price appreciation will still continue, not as fast as what it has. There's an affordability piece in lots of parts of the country that people just can't afford homes that are out there right now. Median price in the country in that $400,000 range. I expect that to slow the increase. I expect that to slow a little bit. We're going to see rates come down. We're going to see more purchase transactions happen. We're going to see more people getting into the house. I think if you can buy now, 2026, 2007, 2028, you're going to look back and be so happy you made a move and bought this year, because you're going to see appreciation and you'll likely have a chance to get a lower payment down the road. So if you're thinking 2025 might be the year for you to make a move and buy a home, I've got great news for you. I did a video with all the details. Check it out here.